Okay, welcome everyone. Let's get right into it. Look at these charts, figure out what's going on this morning. So this morning, obviously, there was a move higher. It gapped a little bit higher. Didn't sell off like I was expecting it to. But what I've done is started to take a little bit deeper look at the wedge that we have on the NASDAQ, and I've adjusted it slightly because we got a couple more data points as of yesterday. So I had it looking something like this down here, but as of yesterday, we got a couple more data points. So we'll adjust it up like this, and here's your wedge. The more data points that you get, the more the more accurate a trend line can become. So it's okay to adjust it as you get more data points. What we're trying to do is find the best fit in terms of how many reactions. So as of right now, I've got 4. I've got kind of a cluster right here, a tag right there, cluster right here, and then a recent tag right there. On the bottom side, I've got several. I've got 1, 2, 3, 4, kind of a cluster right there. And then we're starting to break down. We'll see how, if there's any follow through here, or if they want to just if they want to whip it again to the upside. The wedge is now getting pretty mature, so typically you see a break, a decision or a move when you get this, extended within the wedge. So I'm still looking for that breakdown. Let's look at the Qs here. So here's the Qs. I haven't really adjusted my wedge on the triple Qs because this is about as clean as I can make it. So I've got reaction here, a reaction here, and then here's the price action from this morning. They gapped it up. It was up above, looked bullish, but again, when you get to the upper end of a wedge, you want to see how it's a low probability area that it's going to continue higher. Usually what this move is market makers whipping out shorts, making them think that they're wrong. Because when you have a bearish rising wedge, you get a lot of people that see that as a bearish pattern. They get short. They prepare for a breakdown. So the market makers like to trick people and run it to the upside. But the thing is, on the daily, here's your daily wedge right here, and we didn't get a close above that wedge on the daily chart. So ideally, what you want to see is an impulsive breakdown out of this wedge to give you another sell signal. And if it's on the daily, it's obviously better. So a daily close below the wedge, a breakdown would be bearish. Looking at the hourly here, we're just starting to break, but this hour still has 30 minutes to go, so it might not break, or it might continue. So look for impulsive action one way or the other. It could go up, obviously, could break higher. Nothing says it can't. It's just likely to break lower. And with the move above here, this was potentially the opportunity to break higher, and it didn't. It gapped up. It could have started to really break higher, and it just didn't. Instead, it faded. So tells me it's likely to pick up some speed, and we're going to get an impulsive breakdown. That's what I think is going to happen, but we'll have to continue to watch. The S&P 500, I think it's still just trading within this upward price channel, so I don't see any kind of sell signal that I would want to take on the SPY yet. We did get a clean sell signal on the tech sector, on the Qs. I'm just not seeing it on the SPY. So usually for those big sell-offs, you want to see it in both. This might just be a sell-off that takes place in tech, but again, we'll just continue to watch this. This is an hourly chart, and this is your upward price. This is the upward price channel that I have. The interesting move that I'm seeing is in gold. So looks like a breakout as of right now, at least. This is a daily chart of gold. Let me refine it down to the hourly chart here, and you can see here on the hourly, as I scroll out, you'll see this is the downtrend line that gold has been in since August. And you've got lots of rejections at resistance, so it's a pretty validated trend line. You had the breakout right here. This was the first breakout, and that was a false breakout. They made it look good, it held up, but then you got this really impulsive selling right there, and that was your false breakout. And once that false breakout was in place, it was pretty obvious that we were going to go down to the support area, kind of the major support area, which is down around 1790. We undercut it a little bit. And then we've got a bounce, and we bounced from that area. We bounced straight back up to resistance, pulled back a little, and now we've broken out again. Is this the real deal? Well, it's the second breakout. It looks like the real deal to me. We could pull back and come back here and hold. Maybe we hold at this support and then start to build higher over time. Usually when you get, usually that first breakout, if it's the real deal, you won't get the false breakdown like this. But the second time, it's less likely that this is going to be a false breakout. It's pretty impulsive. You can see it just, gold's up $20. It was up 30, 35, I believe. It's selling off a little, but still, there's an uptrend that's kind of like this basically. So, as of right now, I'm taking this as a breakout, and that's why the other day I bought Barrick Gold, and so I pointed that out. And that's one thing I want to keep everyone to keep in mind, that I don't get all the trades right, and when you're especially short trades, short trades are. The stocks go up more often than they go down. So short trades, typically when you take a short trade, they go against you, more days than they go for you. It's just when they start to work in your favor, they work in your favor in a big way, and they wipe out a lot of the losses that you've taken. So that's kind of how short trading works. You take a short trade when the chart's set up, and you start to take on losses little by little. And then it starts to work in your favor, and you get your losses back, and then the trades usually become profitable pretty quickly when they start to work in your favor. But the point is that position sizing is important, because like the Qs, if you take a position in the Qs and it goes against you, well, you can counterbalance that with some positions that go for you. And so here's an example, Barrick Gold. So I told everyone I was buying it right here at this divergent low. And I talked about this setup on this chart for weeks. When we started rallying here, I said, look, we might come down and make a new divergent low, and that's likely an area to be buying at. Not guaranteed it's going to go higher from there, but it's a high probability area where, you'd rather be buying than selling. Let's just put it that way. And so I bought Barrick Gold down in here, and then and I also bought it right down in here as well when we fell to that 1790 support in gold. And from there, from this move all the way to the high today, it's up about 7%. So, 7% gain, and the Qs is, kind of grinding higher at a, 0.5% or so per day. So you can see how that kind of balances out and how you can still end up being profitable. The dollar. So the dollar, I think the dollar for the most part is the reason why the market keeps rallying, is because the dollar just keeps losing value every day. We are still coming, I've adjusted my dollar trend line slightly to capture, these, to more accurately capture these data points right here. So this is about as good, I can't really adjust it beyond where we're at right here. So if we come down to this 89.42 area, 89 area, there is some support that is right down here from that previous low back in 2018. And we are making that bullish falling wedge. We continue to, so the dollar could fall down to that about 89 area. If it does it anytime soon, here's the RSI. If it does it soon, it might keep this bearish divergence. I suspect we're going to rally sometime soon. It'll make a little high, and then it'll sell off down to that 89 to keep the bearish divergence. So something like where we rally here just a little bit, and then we sell off to that 89, and that will bring up this RSI just a little, and then when it sells off again, it'll keep the bearish divergence. That's what I suspect happens. But so we're coming into some pretty big support here. So that's one thing to watch for, where I'm a little confused on gold, because gold is breaking out. You can see it right here, on the daily chart, gold's breaking out. and yet the dollar's coming into major support. Gold and the dollar can rally together, and actually I think we saw that quite a bit earlier this year. So maybe that is going to be what actually plays out. As of right now, I see a breakout in gold, and I see the dollar coming into some support. Going back to the dollar, we do have bullish divergence. Now, if the dollar keeps falling here, we're going to burn through that bullish divergence, and it will no longer be there. That'll be pretty bearish, and that might be what actually happens, and then gold continues to break out. So that's what I'm watching on the dollar. Another gold stock that I set an alert on that just got fired today is this Royal Gold RGLD. So I want to point that out because these gold miners are working. My shorts aren't working currently, but the gold mining stocks are working. So we're trying to find balance, and not everything works all at once. Here's this RGLD. You had this bullish falling wedge right here, and I marked it out, and we've got bullish divergence. See the RSI, how it's it's been moving higher, and so as I zoom in, you can see this low price right in here, right there. That was a divergent low on the RSI. See how it was a higher peak or higher dip than the previous dip right here. So that's a divergent low, telling you that a trend reversal was likely. And so then you have the bullish falling wedge. You look for a break of the trend, and we got one today. Is it another fake out like it was right here? Maybe. But as of right now, it's above. It's broken out, so we have to just take it for what it's worth until it proves us wrong. Now, so yeah, I like this one, and if it's going to run, this has the potential to run, for a decent run. The major target, what you want to look at for the major target is let's see if we can extend this guy out here. The major target right here is really about there, which is a break up to, roughly, we'll say right there. There's some resistance / support right in there around 129.75. So yeah, that is the potential major target before maybe we run into some resistance. Now from where we're at now up to there, it's about a 14% rise. XLV kind of been dead money for the most part. It's rising moderately. I got short on this breakdown right here, and it's up. It's up 1.86% from there, so I'm down about 1.5% or so. Nothing crazy, and it's really kind of going nowhere basically. It does have a negative divergence, so it just is a matter of time when I think this starts to break down, and until then, it will likely continue to rise. That's the thing with shorting as well. It's a matter of time before they start to break down, and most of the time they just kind of drift higher until they actually break down when you have a negative divergence. Okay, let's take a look at PayPal. I am debating this one for obvious reasons. I've been short and it is not working. Now you can see they're moving it higher. It's kind of gapping higher. The thing about this one is still has negative divergence. You look at the RSI right here. There it is, negative divergence. However, the momentum is pointed up. And going back to the PPO, you can see here clearly the momentum is pointed up. There's no bearish crossover. This was actually a bullish crossover right there, but it has negative divergence. So they could burn through the momentum, and it looks like that's what they're potentially going to do, or burn through the divergence. So it's not a large position that I have on this one. I'm probably going to cut it and look for something that looks like it's a little bit more bearish. Carvana, slight pop here above resistance. We'll see how the day closes. It's all about the daily close, but as of right now, they've kind of popped it up here above resistance. We still have a big, clean negative divergence. Each one of these new highs are divergent highs Again, divergent highs are not a sell signal. So I have pointed out that, this is a more aggressive trade that I've been in because I've been adding to a short position every time it tags resistance right here. So yeah, I'm definitely down in this one, but I still like it. These are momentum stocks, so they can run for a little while the momentum is still there. And but the negative divergence tells me that momentum should fade soon, and you're likely when the thing is, if you wait for the momentum to fade on these completely and it's obvious, usually it's a big huge move, and most of the down move has already taken place. So these high flying momentum stocks, you have to kind of, what I like to do is wait for the negative divergence to show up, look for bearish patterns, and scale in over time. I don't just take a big short position on something all at once. I kind of scale in over time so I can continue to add into it as the momentum is starting to fade, which is what this negative divergence is showing, that the momentum is starting to fade. Price is still moving up, but price is not an indication of momentum. So that is, I'm still short this one. I still think it plays out. They might just try to run it up here a little bit before rolling it over. Okay, Peloton. I've been waiting for this one for a while now. And what I didn't like about shorting this one in the past, even when it broke this trend line, so here's your daily uptrend line right here. Even when it broke that trend line, we never had negative divergence. It just had downward momentum, downward price action. And then we got upward price action right here and upward momentum. So it never had negative divergence. Looks like we're about to get that negative divergence here shortly. So a move, and it might come today, but a move above this area right about there, basically 137.60 and anything higher, 139.80, anything kind of a move above those areas, and we've got that those will be a divergent high. We also, as you can see, the trend line right here is right up there. So a back test of that trend line would be a very objective short if that happens anytime soon. If it pops up into the trend line and you have negative divergence right at major resistance, that's about as good as it gets. The only other thing you'd want to potentially wait for is a PPO crossover, but ultimately I think that that's an objective area to at least take a starter short and maybe add to it if it wants to back test a little bit more. And that's something we never had before. We never had that negative divergence on the daily chart. So it's starting to show up. It's not there yet, so I think this can go a little higher. But I just want to give everyone the heads up as this starts to firm up. Update on ZG Zillow Group. So here's your uptrend line on the daily chart. We obviously broke that trend right here, did a back test, and we're doing another series of back tests. So that's all I see this as, is just back testing resistance. You want to short at resistance. You want to buy at support. It's kind of the basics. We still have negative divergence, and we're at resistance. So it's an objective area to short. It remains there. It remains an objective area. So we'll see how this plays out. PPO here is obviously pointed up, so the momentum is still up. But that can shift on a dime. You get a big pullback or bad earnings or whatever. You get some sort of negative news or just selling pressure, and that momentum will shift on a dime. So it's an objective area, although nothing says it will work out. This is an area that is a high probability area of success if taking a short position right here at resistance. Quick update on Citigroup, another short that I have. It's doing nothing. It's just sideways. We're just kind of topping out right here. So we'll see how this breaks. They could easily pop it up, run some stops, and then break down. In general, that's not going to shake me off of a short. But you got negative divergence right there. See there on the hourly. If I go to the daily, negative divergence right there. It's just starting to show up. And we're right at major resistance. As I roll out, you can see here, There's some major resistance. And we are right there. So yeah, a little pop above it. You know, we could pop up here around the 62 area. You got to give it a little bit of room, because obviously when you're that close, they can try to run, you know, the market makers can try to run some stops. So you got to give it a little bit of room, but it still looks good to me in general. And just to summarize, here's the NASDAQ futures. They're starting to break down. It's not impulsive yet, so we got to continue to watch that. And then triple Qs, they're still kind of dancing around within this wedge. Not sure if they want to give it up or not. So again, what you want to look for is that impulsive selling. It'll show up. You know, if it's going to show up, you'll see it. It'll look like the market falls off a cliff, and that's kind of the next sell signal for a break of this wedge. If we don't get that and it wants to move higher and it rallies into the close today, I'm probably going to stop out on this short trade. So I took the short trade right here on this breakdown candle, and if it, you know, so as of right now, I'm down about 1.25%, we'll say. That's manageable. So if we rally in, you know, start to rally into the close, I'll just go ahead and stop out and look for the next sell signal. Maybe it comes in the form of a gap down or some impulsive breakdown, but until I see it, we'll just go ahead and stop out. But if we get it today and we start to, you know, sell off, we get that sell signal, then I'll likely add to my short position. And that's all I got, guys. So thank you, and I'll catch you guys on the next one.